In today's trading session, you can see that the S&P 500, the Nasdaq, and the Dow Jones 30s have all rallied quite substantially. Dow Jones up around 1%, the S&P 500 up around 2/3%, and the Nasdaq is once again the main leader, if you don't count the Russell 2K, which is up 1.7% today. But as you can see in the markets, Apple today is up around 2.5% today, although it was up at one point a lot more and hit a high of $446 today. I promise this ad here is sponsored by CNN or some news company. It's not, it's not based off of my viewing history or anything like that. Microsoft today is up around 6% on news that it was acquiring TikTok, seeing that Donald Trump is close to banning the app in the United States for security reasons. And I guess ByteDance, which is the parent company of TikTok, decided that it's better to part ways with the app, make a bit of cash on it, rather than have the entire app being devalued essentially by the ban. And so Microsoft does look to move quite a bit on that news. Besides that, not all tech companies are up today naturally. We have Amazon down a bit, Facebook down a bit, but not a lot. But as you can see today in general, top stocks are mostly green today. Some exceptions obviously, but a lot of green movers today in the markets. Taking a look at the S&P 500 futures, you can see that we have started the month very, very green here. In fact, we have broken to new highs since the March crash as of today. If you take a look at the daily candle, this is what it looks like. But as you can see now that we're at this level, we're sort of nearing all-time highs, and we might see a little bit more resistance at this level. Although it is interesting to point out that the US dollar continues to remain weak, and that is what pushes us higher. And I know a lot of you guys, if you've been watching a few of my recent videos, might be tired of me saying that in every video, but I wouldn't be repeating it over and over again if I didn't feel it was true. If we look at the S&P divided by the liquid money supply, I found somebody posted this on TradingView, and I got featured on TradingView's Facebook. But essentially, this just compares the true valuation of S&P compared to the available money supply. The M2, not the M3, because the M3 includes very long-term bank holdings or something like that. I didn't pay too much attention in macro back in the day, but there's a reason I'm a day trader and not working at the Fed at the moment. But anyways, besides that, you can see that in general, this is pretty much what the true recovery looks like in the markets. We're obviously higher than the lows here, but we're not nearing all-time highs on this chart. Once you include the the influx of US dollars into the circulation of money. This chart looks a lot more realistic of what the markets have been doing, which if you look, historically, we're not at highs by any means. In fact, I think you can see that the entire rally here, really didn't go too much past where we were, back in 2007. And so, the Fed printed a tremendous amount of dollars in 2008 to, combat the recession. But since then, we saw a massive rally. It was in part fueled by, the continuous printing of money. And, as the money supply gets larger and larger, people have to put it somewhere. And in recent times, people were fine with holding on to the US dollar. Inflation wasn't too bad. And, despite all that we were seeing here. And the US dollar was pretty much a safe haven currency. According to a lot of investors, the US dollar has increased in value, at least against most other global currencies, for a very long time. And that's because it paid a very high interest rate of around 1.75%, I believe. And so investors wanted to, buy into the US dollar. They wanted to buy into the short-term treasury note, which was pretty much considered a risk-free investment, because the US government has like a perfect credit rating. Bond yields collapsed, the US dollar has also collapsed, and as a result, there's really no incentive to be holding on to the US dollar anymore. People are, spending that US dollar on commodities such as gold, Bitcoin, or fundamental investments such as the S&P 500 or the Nasdaq. And as a result, we simply see a large influx of money into these markets, and the US dollar, as a result, has gotten demolished, and will likely continue to see that, seeing that the Federal Reserve said last week that they had no intention, not even a thought, about raising the interest rate so long that the unemployment remained at the current levels. We might just see a very strong stock market going into the future. I don't know if I agree with the fact that certain stocks are now at massive valuations. I don't know if Apple's a $2 trillion company, and Apple is actually one of the more fundamental companies. There's companies that haven't churned a profitable quarter since their inception, and they're being given like a 10 billion, 20 billion, 30 billion dollar valuation on the basis that they're a tech company or they're a data analytics company, or they promise some sort of new innovation. But I'll do a quick wrap up on the S&P 500. I think at the moment we probably will test all-time highs at this moment. Obviously not today or tomorrow, but sometime in the next month or 2 months, I think we will challenge the highs. It just appears as though we will. We're a little bit overbought at the moment, but dips are buying opportunities at the moment. We likely won't see any change in the trend. If you look back at some of the major economic collapses, such as the 1989 collapse in Japan or something like that. A lot of that can be traced to central bank raising interest rates, which, if we don't see any of that here in the United States, well, it's hard to justify a trend reversal at the moment. And so as a result, stocks move higher. And I say that every day, but it's true. I thank you very much for listening to my analysis on the S&P 500 index, and I wish you best of luck in your trading. Take care.